Have you ever looked at the news and heard these insane numbers? The United States owes over $38 trillion. Europe owes $14 trillion. Japan owes $9 trillion. All told, global debt has exploded to over $315 trillion. That's nearly 3.5 times the size of the entire world economy. It feels like every country on Earth is drowning in debt. And it makes you wonder, if everyone owes money, who exactly are we all paying back? Who is the world's creditor? The answer is going to change the way you think about money, economics, and even the news you watch every single day. The truth is, there isn't some shadowy figure or a secret cabal of billionaires that the world owes money to. The creditor isn't a who, it's a what, and that what is the system itself. Welcome to the Archive of Gold, where today, we're pulling back the curtain on how modern economies turn debt into money, and why the whole global financial system depends on confidence, not on actually paying anything back. Let's start with the basics. When a government, like the United States, needs to spend more money than it collects in taxes, which is almost always it has to borrow, how does it do that? It doesn't just go to a giant bank and ask for a loan. Instead, it issues something called a sovereign bond. You can think of a bond as a fancy IOU. The government says, give me $1,000 today, and I promise to pay you back in 10 years, plus a little bit of interest along the way. So who buys these bonds? Who is lending the government all this money? You might imagine it's other countries, like China or Saudi Arabia, and while they do own a portion of U.S. debt, they are not the main lenders. The biggest owner of America's debt is America itself. It's a mix of different groups right here at home. First, you have the Social Security Trust Fund. The government essentially borrows from future retirement funds to pay for today's expenses, leaving an IOU in the fund. Then there's the U.S. Federal Reserve, our central bank. It buys massive amounts of government bonds, which is a process we'll dive into later because it's how new money is essentially printed. But the largest group of lenders is the American public and institutions. This includes your own retirement account, like a 401k or an IRA, which probably holds government bonds because they're considered one of the safest investments in the world. It includes big pension funds that need a reliable return to pay retirees, insurance companies that need to park their cash somewhere safe, and even regular individuals who buy treasury bonds directly. So in a very real way, the US government owes money to its own citizens and its own institutions. It's a giant, circular flow of money within the same economy. The same is true for most developed countries. The majority of Japan's debt is owned by the Japanese, and most European debt is owned by Europeans. This brings us to the most mind-bending part of the whole system. Governments have absolutely no plan to ever pay off this debt. Not the principal amount anyway. Think about it. If the US tried to pay back its $38 trillion debt, it would have to raise taxes to astronomical levels or cut spending so drastically that the economy would collapse into a depression. No politician wants to do that. So what do they do instead? When a bond comes due, say, a 10-year bond issued a decade ago, the government doesn't scramble to find the cash to pay it back. It simply issues a new bond to pay off the old one. It's called rolling over the debt. It's like paying off one credit card by taking out a cash advance on a new credit card. As long as people are willing to buy the new bonds, the government can do this forever. The only thing they really need to pay is the interest. And as long as the economy is growing faster than the interest payments, the system can sustain itself. This is the big secret. Sovereign debt, for a country that controls its own currency like the US or Japan, isn't like your personal debt. You have a finite lifespan. You have to pay back your mortgage, but a country, in theory, lasts forever. So its debt can be rolled over indefinitely. The debt itself has become a permanent feature of the financial landscape. It's not just a loan. It's a fundamental part of the money supply. Now let's talk about the central banks, like the Federal Reserve. When the economy is weak or in a crisis, the Fed steps in and starts buying government bonds on the open market. This is a process called quantitative easing. Where does the Fed get the money to buy these bonds? It literally creates it out of thin air. It just adds digital dollars to its balance sheet and uses them to buy the bonds from commercial banks. This injects new money into the banking system, which hopefully encourages banks to lend more, stimulating the economy. So in this sense, the central bank is creating debt to create money. The government issues bonds debt and the central bank buys those bonds by creating new money. The debt and the money are two sides of the same coin. The entire system is built on this continuous cycle of borrowing and money creation. So who is the creditor? It's not a country. It's not a secret society. The creditors are everyone who participates in the financial system. It's you through your pension fund. It's the bank where you keep your savings. It's insurance companies. It's other countries looking for a safe place to store their wealth. The creditor is a vast decentralized network of promises. We all agree that a U.S. government bond is a safe asset, so we buy it, and because we all believe it, it becomes true. The entire $315 trillion global debt machine runs on one single powerful ingredient: confidence. Confidence that the United States will always be able to pay its interest. Confidence that the government can always issue new bonds to pay off old ones. Confidence that the dollar will hold its value. As long as that confidence remains, the system keeps chugging along. But what would happen if that confidence were to disappear? If people suddenly stopped buying government bonds, interest rates would have to skyrocket to attract new lenders. The government's interest payments would balloon, forcing massive tax hikes or spending cuts. The value of existing bonds would plummet, wiping out the savings of millions and destabilizing every bank, pension fund, and insurance company. It would trigger a financial crisis unlike anything we've ever seen. This is why you hear so much about the full faith and credit of the United States. It's not just a phrase. It's the invisible glue holding the entire global economy together. The system isn't about repayment. It's about trust. The debt isn't a bug. It's a feature. It's the raw material from which our modern money is made. So the next time you hear a politician screaming about the national debt, remember what you learned today. We're not talking about a debt that will ever be repaid in the way you pay off a car loan. They're talking about the size and stability of this giant global system of promises. The real question isn't, how will we ever pay it back? The real question is, how long can we maintain the confidence that keeps the machine running? Once you understand that, you'll never see headlines about deficits and debt the same way again. You'll see the matrix behind the numbers, a world built not on gold or silver, but on an endless rollover of trust. Thanks for joining us on the Archive of Gold. If this blew your mind, make sure to hit that like button and subscribe for more deep dives into how our world really works. See you in the next episode.